What's up, everybody? It's your boy Sat coming to you with today's stock pick, indicator help, and general investment tips. Remember, this channel is all about no face, just facts in 5. I do the research, so you don't have to. Shout out to 11 Labs for making every video possible with their next-gen voice cloning and text-to-speech tools. Link in the description and profile. Let's dive in. Today we're breaking down VWAP, one of the most important indicators used by day traders, institutions, algorithms, and professional traders every day. And we're keeping it simple. VWAP stands for Volume Weighted Average Price. In plain English, it shows the average price a stock is traded at during the day, but it gives more weight to the prices where the most volume happened. That matters because heavy volume shows where real market participation took place. Think of VWAP as the fair price line for the trading day. It resets every day at market open and is mainly used on intraday charts like the 5-minute or 15-minute. When price is above VWAP, buyers are often in control. When price is below VWAP, sellers are often in control. The calculation sounds complicated, but the idea is simple. VWAP combines price and volume. It takes the typical price, multiplies it by volume, adds that over time, and divides it by total volume. But don't get lost in the math. The key takeaway is this. VWAP is not just asking what is the average price, it is asking where did the most meaningful trading happen? Traders use VWAP for 4 main reasons. First, it acts like an institutional benchmark. Big funds and professional traders compare their entries to VWAP because they want to know if they got a good price compared to the average participant. Second, VWAP works like a trend filter. Holding above VWAP can suggest bullish strength. Failing below VWAP can suggest bearish weakness. Third, VWAP can act like dynamic support and resistance because price often reacts around that line. And fourth, VWAP helps confirm entries and exits by giving traders context before they jump in. Now let's use NVDA as our example. On the chart, the blue line is VWAP. Early in the move, price is trading below that line, which tells us sellers have control. The candles are weak, price is struggling, and traders watching VWAP would be cautious about taking long setups too early. But then, NVIDIA starts pushing back toward VWAP. Price approaches the line, breaks through it, and then begins to hold above it. That is called a VWAP reclaim. This is where the signal shows up. Price was below VWAP, then it reclaimed VWAP, and after that, the trend continued higher. The reclaim does not guarantee the stock will explode, but it gives a clean clue that momentum may be shifting. Instead of guessing, traders can say, buyers are starting to take control, price is above the fair price of the day, and now I have a reason to watch for continuation. This is why VWAP is powerful. It gives structure. A beginner might look at the chart and just see random candles, but a trader using VWAP sees a story. Below VWAP means sellers are winning. Reclaiming VWAP means the battle may be shifting. Holding above VWAP means the bullish move is being confirmed. That is the difference between reacting emotionally and trading with a plan. But VWAP is not magic. It can fail. Sometimes price reclaims VWAP for a few candles and then drops right back under it. That's a false reclaim. Sometimes price is above VWAP but then breaks below it and keeps falling. That's a VWAP breakdown. This is why you never buy just because price touches VWAP. You need confirmation. You want to see price reclaim the level, hold it, and ideally show strength through volume, trend direction, and price action. The most common mistake beginners make is treating VWAP like a guaranteed buy signal. It's not. VWAP is a guide. It helps you understand who may be in control, but you still need risk management. Know where you're wrong before you enter. If price reclaims VWAP and then quickly loses it, that may be your warning sign. If price stays above VWAP, builds higher lows, and volume supports the move, that is a stronger setup. So how should traders use VWAP? Keep it simple. If price is below VWAP, be cautious with long trades because sellers may still be in control. If price reclaims VWAP and holds, start looking for possible bullish setups. If price stays above VWAP, the trend may be continuing and traders may look to ride the momentum. But always use VWAP with other factors like support, resistance, volume, trend direction, and stop loss planning. The big takeaway is this. VWAP helps you identify the fair price of the day and shows which side may be winning. Above VWAP, buyers usually have the edge. Below VWAP, sellers usually have the edge. A VWAP reclaim can be a powerful signal, especially when price holds above it and momentum follows through. Remember, I'm not a financial advisor, and this is not financial advice. Always do your own research before investing. If you found value in today's video, hit that like button, subscribe, and share it with someone who's just beginning their investing journey. This is Sat with Stocks by Sat 06, no face, just facts in 5. Keep learning, keep investing, keep building. Peace.